that need into account?
Muchas gracias, Mr. Sant.
Yes, I would just like to ask one question, one critical question. We are working within a framework that was really fashioned, was really modeled on the experience and what was happening, the events of the early 90s. Does not the rapporteur think that we might have to have a more critical approach on this basis? Will the standards, do the standards, economic, social, financial, of the early 90s still fit the realities of today? Does he not think that we might perhaps be discussing as well a radical critique of what we're doing in terms of whether the tools we are using really reflect the challenges we face, whether the methods by which we assess the situations that we are experiencing are actually giving us a true picture of reality, a true picture of where we have to go, a true picture of how we have to do things to get investment going, to get jobs going. We had recently the governor of the French Central Bank who said there is a secular decrease, not just in Europe but also in the US, of investment, private as well as public, and that we don't know where this is coming from, what is causing it. Now, don't you think perhaps that we should also discuss whether the kind of methods that we are using, the kind of appreciations that we are putting forward, reflect, of course, the neoliberal realities that we live in, but reflect to outdated concepts in terms of how we have to understand realities. We have a very different context now to the one that was developing in the early 90s. Globalization has really moved forward at a big, big pace. And people are afraid that what we are doing just does not reflect their preoccupations, their needs, the way they feel things. We all the time are dragging forward ideas, possibly, that are making oligopolization work on a global scale, on a European scale. Is this what we want? And this is becoming increasingly the trend. Everything we say, everything we do, reflects not the needs of people, not the realities of European economies, but the realities of European oligopolies. So my question is basically this. Does not the rapporteur think that it's about time to have a critical appreciation of how we're doing things, not just in terms of outcomes, but in terms of methods?
Muchas gracias.
Thank you. Mr. Sant, any other comments? No? I'll hand back to the rapporteur to wind up our debate. Go ahead, Mr. Hökmark.
Thank you very much, and thanks for the reflections, but also the questions. I think first, if I may turn to Madam Beres, the Juncker plan is there because we need more investments in Europe. But I don't think anyone here believes that we can reach the sufficient level of investments in Europe by spending from the EU budget or from public finances. We need the private investments. In order to get the private investments in place, we need the stability, and we need, for a long-term perspective, low interest rates. And please let me remind all colleagues here what happened when we were very flexible with the budget policy. What happened in country after country, and I think it has happened in most of our countries, that is that the higher deficits, and if I may phrase it, the higher level of flexibility, the bigger the problems. As was mentioned, when France and Germany opted out, that created some problems. Yeah. When the deficits raised, then we couldn't see any investments. And we talk about reality sometimes and about theory sometimes, but if we're looking upon the European economy, we have at least 8 member states having excessive deficits. And that hasn't led to investments. That hasn't led to growth. That has led to bigger deficits and paved the way for austerity, because in the end, when you can't borrow, when you can't finance, then you're entering that draconical austerity. And I think what is needed here, if we are to achieve a consensus, and I hope we can do that, or a majority still, that is, we need to focus on what we can do in order to challenge and face the global competition. And global competition we can deal with if we improve competitiveness, if we can achieve innovations, if we can achieve investments coming from the private sector, because we know there is in the global economy a lot of money to be financed, but we need to make it more attractive. That if we are losing the control over public finances, then we're scaring the investments away. There is no bigger threat to the European economy than the threat of undermining the credibility of the stability of the European economy. Can anyone say that we have achieved a stimulating effect with the deficits we have had? No, but we can see that where you have addressed these problems, you have seen growth coming back. We have seen recovery of economies. And I hope that we can discuss not only the issue about the Stability Pact, but also the issue of structural reforms. Because we can't hope for excluding or having as an alibi for not doing structural reforms, hoping for bigger fiscal deficits. That will not do the way. It hasn't done. It has created bigger problems. And it has created more social problems. Of course, we need to discuss those member states who have room for using the fiscal tool. They can do it, but are we really into saying that we would like to tell the financial markets that we do not longer want the stability by having rules? First of all, I mean, we have legislation in place and we need to adapt to that. But I think and hope we can reach a fruitful discussion about how to secure that we have a qualitative budgeting, allowing for the investments that are needed, structural reforms attracting investments. But we need to respect the rules we have, because otherwise we are undermining the stability. Yeah. Thank you very much for your politeness, Madam Beres. And deficits won't make it.
Muchas gracias.